C. Jairam, Joint MD at Kotak Mahindra Bank as well, joins us on the show. Jairam, hi, morning. Were you a little taken aback by the kind of movement that we saw in the markets, given the kind of global volatility and the kind of FII inflows that we'd seen, and they all just vanished in one wash?
Well, not really. I think it's been pretty clear for a period of time that markets in India are broadly sort of moving on the back of global liquidity. And clearly, the markets here are currently very aligned to global markets. So in that sense, the movement last week on the back of the US Fed announcement saying that they are likely to sort of slow down asset purchases, which affected all markets, was bound to affect India as well. And to that extent, I don't think we were too surprised with what happened.
So do you think in the near term markets are unlikely to do anything special?
At this point of time, I broadly think so. I think we should probably focus more on what's happening globally in terms of both liquidity as well as what's happening in places like the US and Japan. And I think global markets will take their cues from some of these things. And I would suspect that until some fresh triggers emerge, Indian markets are also likely to sort of follow suit.
Jairam, last week, even though Japan was under stress, Japanese Nikkei corrected more than 5-6%. US markets held out pretty nicely. So do you think the right thing in this market is to focus on the big market, which is US market, which is in some kind of a bull run?
I probably think so. I think clearly the big cues right now have to come from the US because there is a school of thought and a strong belief that the US economy is on the revival path. And hence, it now sort of remains to be seen as to what policymakers, particularly the Fed, will do in the context of this. And that will have an impact on global markets. Because really what's happened over the last few months is that US markets have done particularly well over the last year or so. And I think historically we have seen that whenever US markets does well, there is interest in equities globally as an asset class. And so to that extent, you start to see more flow coming into equities, and that sort of helps emerging markets like India as well.
Jairam, when we started this calendar year, the popular trade on the street was buy into PSU banks, buy into industrials, and buy into capital goods stocks because Indian economy will revive, and when economy will revive, capex or largely economy-related stocks, they do well. Do you think that trade clearly has failed?
Well, let me put it this way. I think so far it hasn't really played out. And I think part of the reason is that it is premised on the fact that there would be certain policy decisions which would help the economy. I don't think that has really materialized. In fact, what has really helped the economy is really, again, issues more by default than by design, because commodity prices have softened, so oil has been stable in the range of 100 to 105, gold prices have come off, and overall commodity cycle seems to have turned. So I think that's helped in the context of inflation in India, and that's been really the broad sort of positive. And I think that's a little different from what people believed at the beginning of the year, where they thought that there could be policy decisions leading to more investment and hence benefits of certain sectors.
Jairam, so what could provide the next leg up for the market, despite, of course, technical adjustment, which perhaps we may be seeing today? Do you think it would take an RBI rate cut to actually provide that fizz to the market?
Well, to me, over the next few months, there are really only two broad sort of triggers emanating from the sort of domestic economy. One is clearly interest rates, and I think currently there is a belief that over the next fiscal till March 14, you will see interest rate cuts of anywhere between 50 and 75 basis points. So I think whenever that happens, that could certainly be a trigger. And the second is obviously elections. I mean, if you have early elections, which some people are speculating on, that could again sort of become a trigger.
So when do you think Indian markets will convincingly snap out of this so-called long trading range? Not once, but maybe 2 or 3 times in the last 3 years, we've failed to scale up above 60-100.
Well, I think I don't see that happening in a hurry. I mean, I think unless global sort of liquidity again comes in very strong over the next few months, and I think that at this point of time is a little uncertain. I'm not convinced that markets will sort of really take off right now. So I think we might need a period of consolidation at around these levels before we start to see the next triggers emerge.
Jairam, there are 2 ways markets have historically moved, or they always will move. One, you could see an earning expansion. B, you could see a P expansion. Now, the case for earning expansion at the current juncture is not big, but there is definitely a case for a strong P expansion. We've seen one happen in pharmaceuticals, other one in FMCG. So where to your mind at the current juncture there is a strong scope for P expansion?
Well, if you look at the possibility of PE expansions, they typically happen in sectors which are reasonably stable and about which the market is sort of reasonably sanguine. And I'd probably argue that many of those sectors are already played out. I mean, whether you're looking at sectors like FMCG for sure, pharma to some extent, private banks to some extent. These are the sectors which by and large have stood the test of time and have been fairly steady. And in many of those, that sort of PE expansion which you're talking about has already played out to some extent. So I would probably argue that to see the next phase of growth, you really need some kickers to come in from sectors which currently are valued at fairly poor sort of PEs, which would include many of the interest rate sensitives, whether you're talking about the infrastructure sector, whether you're talking about real estate, etc. And that could actually take some time because unless you see the investment cycle kick in, many of those sectors are unlikely to sort of take off.
Mr. Jairam, really appreciate you taking the time out and joining us on the show.